Hi, I'm Merritt Black, and I head up the futures trading desk for S&B Capital, a proprietary trading desk based out of New York City. Recently, I took to Twitter. I asked you guys, what was it? What were some of the biggest things that you felt were holding you back, preventing you from becoming the CPT, the consistently profitable trader that you want to be? We got some great questions from the community. So in this video, you're going to learn about things such as how should I manage my stops? How should I handle targets and letting winners run? How do I know if on a certain day I have any edge or not? Let's dive into this tweet here. For those not CPT being consistently profitable traders, what seems to be the biggest two things preventing that for you? So then I'll do this video addressing if I feel I can add value. Ashton's saying large losses, position sizes, ATR, vol of product, targets, how many trades per day. So this is a lot, right? I mean, we could pretty much most any of these responses we could spend a couple hours on, but that's not what we're going to do in this video. We're going to keep it concise. So I think large losses, position sizes are directly correlated, right? So you've got to get your position size under control. I think the best way to do that is to take a look at your assets, your trading goals, what you're up to financially, come up with an acceptable daily loss limit. It's all got to start there. And then from that, you can back into, based on your methodology, how many swings you need, how many attempts you need to allow your methodology to work or not work throughout the day. And then you simply break up that daily loss limit into an acceptable max per trade risk. Okay, so once you've got your per trade risk, well, now it's simple math. Hey, I'm thinking about getting into this trade. How far away is my stop going to be? Okay, I know how far away my stop is. I know the tick value of however many ticks, the distance to the stop is. And I know that max risk per trade, or not even max risk per trade. Think of it like, I think it's a little mental trick, a desired risk per trade. How much do I, it's kind of getting into Mark Douglas here, how much do I want to risk per trade to find out if that trade's going to work or not, right? So that's how you get rid of large losses. That's how you fix position sizes. Not sure what to tell you about ATR and volatility of a product. I know my methodology kind of takes care of that in and of itself because I'm looking at like standard deviations of movement and things like that. So not really sure what to tell you in that regard, but you've got to be aware volatility is huge. You have to adjust with the ever evolving volatility of what you're trading. Well, let me address targets a little bit. Targets will never be perfect. Okay? Everyone, you're always pissed with targets. Either, you come out too early, or you decide to give it more room, and then you come out too late. I'm using air quotes here for too early and too late. Targets will never be perfect. Yeah, once in a blue moon, you get a top tick out of something, great, good for you. It's random. Okay, luck. Come up with, again, designing your trading business. What are you trying to accomplish? Your targets should be based around what it is that you're trying to achieve. Targets, don't make them man-made, make them structural. Same goes for risk. Make them based off of pure market-generated information. Do not just throw up a target that's, a multiple of your risk or something like that, in my opinion. And again, trades per day, that has to go back to how we were backing into figuring out position sizes. How many trades a day do you need to effectively do what your methodology calls for? If you limit yourself to 1 trade per day, is that going to handcuff you? Is that going to prevent you from actualizing the winners that your methodology produces? How many swings do you need to find those each day and whatnot when they're there? Number 2, finding the discipline and patience. I almost don't even need to read any more of this sentence. Finding the discipline, finding the patience. Okay? You guys at home, and Gabriel, you can finish your own sentence, which you've already done here. You guys at home, finish your own sentence. What do you need finding more discipline for, more patience for in your trading? And once you've got that, now let's talk about it. Discipline and patience are bullcrap. Maybe could a human come up with a way of garnering willpower, which is essentially what we're talking about here. Discipline, you have willpower to enact discipline. You have willpower to exercise patience, right? That's what it takes. But the implications, the root of what we're talking about here, there's something that's underlying, and it's that there is a conflict, that there is a way that things should be done, and then there's this little angel on one shoulder, devil on the other shoulder type, the way that you impulsively want things to be done, or the things that you want or need short term versus your long term goals, right? There's a dissonance, there's a problem, there's a conflict. The solution is not willpower. The solution is not discipline. The solution is not patience. The solution is removing the conflict. And we do that in our Futures Foundation course, which it sounds like you've just taken the Market Profile course, which is it's purely about finding true risk reward in markets and seeing what they're up to. Foundation starts off with a mental framework. And we want to work. It's not something you can listen to and be fixed immediately. Might happen for a few people, but for most people, changing belief systems, changing the way you think about markets, the way you think about what you're trying to do as a trader while you're sitting there doing it, that's the type of things which are the holy grail of being able to go do what's required to be profitable, which is to go execute, right? You got to have a system with edge, and then you have to have a mental framework that you can go operate effectively and then apply all the short-term tools and tactics and go execute. All right, JP here. 1, identifying early in a session if my strategy has edge in this environment. Can't wait to talk about that. 2, trade management, knowing when to exit a position based on market-generated information. All right, I love these. So 1, identifying early in a session if my strategy has edge in this environment or not. I really love that. I love that that's the line, the thought that you're going down there. We're just not quite there yet. So this is absolutely a question we need to be asking, but you need essentially what's in the Market Profile course. You need, and I promise this is not just a pitch to sell courses, guys. It's just that I've got good information to give you, and those things are available to get. So it's not something I could spend enough time in this little video to give you. But in general, you need a market framework, a market worldview, a way of understanding context, which is what you're asking here. Hey, is this environment good for my edge or not? That's context. So you need to, obviously, before the session even begins or as the session begins, part of pre-market prep, what myself and my students are doing is we're identifying what is this environment, what is the context. Therefore, we have actually a toolkit, a quiver of arrows, if you will, different things that we'll pull out based on those contextual situations or environment. So it's not like identifying early in the session if you have edge. It's identifying the context before you even start pulling the trigger or even thinking about trades to determine what the best course of action might be. Sometimes that might be sitting on your hands. Sometimes that might be, balls to the wall right off the open. Sometimes that might be going with initiative, price expansion type behavior. Sometimes it might be going for more of responsive mean reversion type plays. And again, sometimes it might be doing nothing. And 2, trade management. And we kind of alluded to this earlier. It's never going to be perfect. You've got to craft your trading business. You got to kind of find your niche. Are you a short-term trader that's looking to capture direct momentum, and as soon as that dries up, that's where you exit? Great. We could teach you how to do that. Are you looking to ride trends for all they're worth? Well, how do you define that trend? How are you monitoring for its stalling or shifting? That's the point at where you would find an exit. Or do you have a structural way of viewing markets to where you set certain targets, have certain expectations for movement, and you set those? Either way, I love that, again, you're on the right path here, wanting to use market-generated information to structure your trade management. I would argue that trade management is probably more important than entries. Personally, I know we could debate that all day, but I think trade management is critical. And knowing the type, it kind of relates to the first question. Knowing that environment, knowing that context, for me at least. Again, which arrow am I going to pull out of the quiver in terms of trade management? There are times where I'm looking for bigger moves. I give it more room. I trail stops. I don't trail stops. Those type of things. It depends on the situation. I believe in markets that behave differently, whether they're reacting to, say, an area of low volume or whether they are bouncing around in an area of prior established balance and high volume. I think those markets behave differently, and they call for different tactics, different strategies, different trade management. Bart, finding the right stocks to trade, tools, or software. Just based on this question, it sounds like you're just at the very, very beginning of kind of figuring things out, right? I can't tell you what tools or software to use because I don't know what you're trying to accomplish. We have a really good, again, here I am pitching a course, sorry, but our super cheap intro to futures course. I know you're asking about stocks, but in terms of tools, software, I'm not going to tell you which to choose, but I am going to get you to ask the right questions to go find for yourself what tools or software you need. But right now, it sounds like you don't know. And if you don't know, I don't know. A deep question here from Johnny B. Not sure if I'll be able to answer it, but the topic of sustainable creativity and idea generation. I really love the question off the get-go because you can, quote me, find blog posts, different things in the past where I've talked about creativity is a really underrated skill set of traders. Creativity. You've got to be able to envision, in a creative sense, moves unfolding and things happening rather than just kind of like staring at the chart itself. It's one of the reasons, quite simply, I like to leave a little bit of blank fill space on the hard right edge of the chart. I like to be able to kind of envision what's going to occur over there in that blank space. So anyways, how do you firstly and continually find ideas? How to structure an executable trade from these ideas, taking into consideration both up and downside. How to validate that structure. I continually find ideas through a consistent and robust top-down technical approach. I start with some higher time frames. I work my way all the way through what's happened in the overnight session leading up into the open. When am I going to begin trading, or just before the open typically. So I have a process for doing so. I have a framework of understanding market movement. So I'm not typically looking hardly ever as a prediction of what might occur. And it's a very, very hard to understand concept for a lot of people that I don't actually predict what's going to happen. I'm simply looking at the environment, as we talked about earlier, the context. I'm looking at what is occurring. Therefore, I'm simply looking for a continuation of what is. And if you want to call those my expectations, then that's fair. So, I have a process for finding ideas. How do I structure and execute trades from them? Take into consideration upside and downside. My higher time frame gives me that upside/downside overall risk reward framework, and then it's a matter of dropping into lower time frames to then apply lower time frame tools, VWAP, order flow to pull the trigger and execute. And then furthermore, I even limit the downside of each idea on those lower time frames while maintaining the upside of the higher time frame risk reward asymmetry. Executing after a loss, that's huge. To me, there's a little bitty tennis book. It's one of my favorite books. And in it talks about doing what's called the mental two-step. Right? Bad things can happen in tennis. Your opponents can get lucky. You can make mistakes. The first step is identification of the negative. I think in today's culture, everybody wants to be positive, and you got a bunch of people flying around like idiots being positive. You have to, accepting or admitting a negative is a positive, guys. That's not a negative thing, right? So first, admit the negative. I screwed up. The market screwed me. Whatever. Admit the negative. That's the first step of this mental two-step. And the second step is founded on a belief system of, and a truth of, the next shot, in our case, the next trade, is more important than the last mistake. All great champions do that. In sports, you name it. In business, all of them. If you're sitting there harping on the mistake or error or how you got screwed, you're not going to perform nearly as well as someone who does this mental two-step. So this is a integral part of doing a good job of trading post losses. Or for me, it used to be a string of losses. 2-3 in a row, that was kind of a trigger for me. Bill, stopping out and not letting winners ride. Again, you got to have a process. Do you have a written trade management plan that you print out and have on your desk and adhere to? Probably not if it's this problem. Also, a lot of people who stop out and don't catch winners that their systems would have otherwise given them, they're doing the old classic move the stop to break even real quick, and that's going to stop you out and not let winners ride. Actually, now that I read this, it sounds like you're struggling with like the basic human problem of trading, which is not stopping out when you should and not letting winners ride. And to fix that, Bill, you've got to develop a better mental framework, a set of belief systems, understanding of truths, of the randomness you're dealing with, the uncertainty that you will never avoid, and yeah, just so many things about markets, how they're random and totally out of your control. And then the next phase is, after kind of working to develop better belief systems around those things, understanding what an edge is, right? It has math to it. It's an equation. Building the mental framework so you can execute on that edge, and then having a process with edge. See, this is why trading is so hard. Not only do you have to really develop fantastic psychology and all these kind of things, but most people just simply don't have a trading methodology or process with positive expectancy. They don't have it. So they're losing money. They're blaming themselves. They think there's problems. But anyways, Bill, in order to fix what we call the natural human trader. So the good news is that you're not unique in this regard. There's nothing wrong with you. You're natural. We got to move from what we call in our Futures Foundation course, the natural human trader, to this evolved human trader. You got to learn to think differently about markets and trading, and that's going to open you up to avoiding these amateur problems. You will get past them, just as all of us do. Not that that's the end of the road. There's plenty more problems waiting for you on the other side, but Those are basic problems, and you'll be able to move through them. Okay, how to mentally prepare for the session. Everyone's talking about how to do the prep technically, hypos, blah, blah, blah. But what to do to be mentally ready to execute your process flawlessly? Love this question. Because as we've talked about on this talk so far, it's a requirement. So I think that most all mistakes, errors, problems in life and trading come from getting sucked into the short term and forgetting who you want to be long term as a person, as a trader, right? So one of my favorite tips to give people as part of pre-market prep, and by the way, I love your point. Well, let me finish one thought. Is to connect with your bigger picture goals, life, recreation, trading. Connect with some longer term goals as a part of a pre-market process, and that's going to give you a little bit of edge, so to speak, in terms of aligning you with those things, rather than if you don't connect with those things, well, now you're more prone to just be impulsive, right? And act in your short-term interest versus we're trying to get you to connect with your long-term interests. So that's a big one. Anyways, I love that you're asking this question. It's so on point because I've mentored a lot of traders, and essentially right now, sorry, somebody out there who did a really good job with this. I think some of my newer students, they've been following me long enough, they kind of know what I want to hear. So sometimes I get a little bit of that. But in general, most everyone, when I ask about their pre-market prep, nobody's telling me that they prep themselves. That's one of the first things I have attacked with people over the years, or approached, shouldn't say attacked, tackled together, is the concept of preparing yourself, right? Another quick tip, another thing that we teach is to assess yourself, just a quick check-in, not only emotionally, right? Did you just have a big knockdown, drag out with your spouse? Are you too emotionally upset to trade well? Are you too off balance there? So all kinds of check-ins. Are you physically too sick, too tired? You need to check in. But also one that I really like is actually a confidence check-in. Have you been crushing it the past 8 days in a row? You might be getting a little cocky, a little overconfident, which can cause you to do what? Make mistakes. It can cause you to trade too big, trade too, frequently, overconfident type stuff. Or has your past 3 or 4 days in a row been daily loss limit days, and you just feel like everything you touch disintegrates in front of your eyes and the market's out to get you? What can that cause? Problems, hesitation, missing trades, undersizing, not putting enough risk on for really good opportunities just because of this recency bias. So having you check in with that and simply admit it and bring it to a conscious level of awareness can be huge. And then Samcha here, I think that pretty much everything I've addressed today, from mental framework and belief systems of having a process documented with positive expectancy, that addresses all of these issues in terms of patience we've covered. And then over trading, I think over trading is a word that gets tossed around. What is over trading? It's putting on trades where you shouldn't have otherwise. Do you have a guiding directional beacon of where you should have or shouldn't have? Most people call over trading when they put on several trades and then it's not making any money. Over trading needs to have a very, very black and white standard to it, and it should come from having built out your process for trading, your playbook with defined acceptable A+ trades for you. And if the trades that you would put on in this session don't meet the variables that go into making up those trades, well, now we can call that over trading. And you just need to do a better job in real time of essentially one of the big mental skills of self-awareness. Maybe you need to put some training wheels on, so to speak, given that you do have such a good process documented, right? Don't you? pull out pieces of that and print it out, put it in front of the desk, write it down, and create a little checklist for any trade that you enter. It has to meet at least 1, 2, 3, 4 of these key components of your strategy. And if it doesn't, then it's staring you in the face. And if you're still going to make the trade, well, then you still have a lot of work to do in terms of your mental framework. But more times than not, you're not going to, if you're consciously focusing on that, you're not going to be, that kind of crazy with it. So, anyways, video's getting long here, definitely much longer than I anticipated. But I thought we had some really good questions here, and appreciate you guys chiming in, getting in tune with the issues you guys are having. Helps me with my traders and developing them for our desk. And hopefully there's been some value added to you guys here. So again, I hope you got some value out of this video. There's a lot of things that inhibit traders from growing, and there's a lot of ways based on our experience running a desk that we can help you with. So if you like some things you've heard, head over to smbfutures.com. Take a look at years worth of archives of me answering similar questions for our community. Take a look at our chat room in the community you can join. Take a look at some training programs that we have that might just make you a better trader.